All right. Well, Helene, looks like we have the room opened up here. So welcome in, everyone. Welcome to today's special edition of Trade of the Day Live. Right as here we head into the long weekend before 4th of July. So happy holiday weekend. Happy 4th of July to everybody out there watching. Helene, excited to be here with you this morning.
Yeah, excited to be here with you too. Happy Thursday, early Friday this week.
Yeah, absolutely. Yeah, the markets are closing here in just about 30 minutes. I have a really shortened trading week this week because of the holiday, but wanted to hop in and do this session with you live just before the markets close. Go ahead and point out a couple really exciting opportunities that we see just on top of just what we're seeing in the markets. Because, again, just a very exciting day in the markets. I don't know if anybody caught it out there. Helene, you probably saw this, but after
Oh
the
yeah.
significantly better than expected jobs report this morning, we had a lot more jobs added than most people were anticipating, and so unemployment actually drop 0.2%, which was great to see. So really signaling some nice strength there in the economy and the labor market. So that was exactly what the market was asking for, and gosh, the S&P's now all the way up to near 6,300. So let me go ahead and share my screen here, Helene. I think you might need to enable it for
Oh
me.
yeah. Yeah, it's a nice way to ride into the holiday weekend, I will say, when something like that happens. It goes exactly as the market was intending, and we get that nice boost higher into the weekend.
That's exactly right. Yep, it'll definitely make those cheeseburgers over the holidays taste even that much better. But here's exactly what we're talking about here, folks. You can see again just the huge gap up higher. We had a really nice close yesterday. We closed at yet another all-time high yesterday, and then this morning on the back of that really bullish jobs report from June. You can see the action. The S&P is up just under 1% on the day, trading roughly near session highs. So really great to see that bullish trading here heading into the long weekend. Helene, anything else here in this chart that you want to point out?
Yeah, I mean, we were talking on Tuesday, and we were saying we're looking at this chart that the S&P is clearly overheated. Looking at the chart, it's trading above the upper Keltner channel. That means it's currently overbought, which means it's more likely for heightened volatility, and also in the sooner than later time frame, ready for a pullback. But we did say that it doesn't mean that it's going to immediately pull back, and it also doesn't mean it's not going to trade higher. And that's exactly what we saw here today. Uh, looking at the chart yesterday, you would have been like, well, we're pretty overheated. Realistically, we should pull back soon, but things don't always follow exactly. And as you can see, we had that major leg higher today. Now at this level, we are extremely overheated. I mean, just look at that RSI. It rarely reaches this level. So definitely expect in the short term to see a pullback, just clearly not right now.
Yep, exactly. I mean, you're pointing out the exact things that were really standing out to me. As you said, you can get into overbought territory and sometimes remain there a little bit longer than you might anticipate. But think about it like a rubber band, folks. Like if you're stretching a rubber band out, you can keep stretching it, and it's pretty far stretched out sometimes. Sometimes you can keep going just a little bit further, and then it finally snaps, right? So that's kind of, just a metaphor to explain kind of what we're talking about here. But you're exactly right. I mean, looking at the RSI chart there below, that's a 5-day RSI. You can see, of course, this is again for the S&P 500 index. It very rarely reaches the level of 90. I mean, that's absolute nosebleed territory
Yeah.
for the RSI. I mean, it only gets there because it's performed very strongly, but that's also a very reliable historical signal that things are about to pull back.
Yeah.
It's probably just going to be looking for a catalyst at this point. Say if this, pretend this morning's jobs report had come in, lighter than expected. Well, that probably would have knocked it right back down. So at this point, the market's really just going to be looking for a catalyst to pull back, because it has gotten so stretched. So, it's definitely kind of in buyer beware territory, just speaking about the short term here.
Yeah.
But, kind of zooming out and looking more at the medium term to long term, things still look very good, Helene.
Mhm.
We're making a nice series of higher highs and higher lows. We're significantly off of the bottom that we set back in early April. We got that golden cross buy signal on the S&P. I believe it was on Tuesday that we got that. which you and I have been talking about a lot recently, because that is, historically it's been such a significant technical buy signal. So you can see that shown right here on the chart where those two EMAs, or excuse me, moving averages crossed with our 50 crossing above the 200. So, zooming out, looking at the long-term horizon, things, are set up very nicely, but, fully anticipating some type of a pullback to come here probably next week sometime, if I had to guess.
Yeah. Yeah, I totally agree with you there, Blaine.
Yep, absolutely. So, with all that said, folks, the S&P and market is still in a really, really nice setup. I told Helene just before we hopped on, it's hard to believe this, but currently year to date, the S&P is up nearly 7% on the year. So, blocking out all of that noise from March and April earlier this year, the S&P is still, just a couple days into the second half, put up some, nice performance, in the on the whole in cumulative, being up to about 7%. But with that said, we do have a couple trade setups that we spotted, despite the kind of overbought and frothy positioning of the index. There's still a couple nice opportunities out there. So Helene, I don't know if you want to go ahead and walk through yours first, or if I should walk through mine.
Go ahead and walk through yours, since you already have the share up.
Yeah, sounds good. Well, I'll go ahead and pull mine up, and it's this one right here, folks. So it's Palo Alto Networks, and so this, if you're unfamiliar with the stock, this is a major player in the field of cybersecurity. They really are at the core of some of the just incredible revolution we're seeing and incredible demand in the industry of cybersecurity. There were them amongst CrowdStrike, Cloudflare, Zscaler. There's a handful of companies that are really, really key, crucial players in this field, and Palo Alto Networks is right there up amongst them. They're kind of on the Mount Rushmore currently of cybersecurity players. But just a little bit about the company there. But right here, we do have a great technical setup for Palo Alto Networks. So let me go ahead and hop in and just explain to you what I'm seeing right here. So of course, here's today's trading action. Stock's trading at about 202 per share. And we do have a nice technical buy signal going on for Palo Alto today. So what we're looking at is our red line right here, which is our 21-day EMA. And then we have our green line down here, which is our 63-day EMA. So it's slightly longer term. We can see our shorter term EMA is trading above that longer term EMA. And the crossover actually happened right here back roughly in the first to second trading week of May. So really bullish technical setup there. Just looking at the trend line. So a nice bullish trend underlying the stock. It's had a really nice move off of those April lows, making a nice series of higher highs and higher lows. And these 2 points right here, these are actually when the stock set all-time highs. So you can see late
Wow.
last year, the stock traded up, made its all-time high intraday right there in December, traded back up, and just a couple months later in February, made a new all-time high, of course, before the market sold off. Well, you see where the stock's trading now. It's rallied back right up to that point, and where that's kind of served as some significant resistance right around that 204 per share, 205 per share level. In my experience, generally when a stock goes up and challenges that level for a third time, it's very likely to break through that level. It generally doesn't trade up there and have a triple top. You sometimes will see a double top, and stocks will fail at a resistance level twice. But if it trades up there for a third time, it very often is going to break through it. But with all that said, understanding the context of the markets, they are a little bit frothy on the index level. Currently, Palo Alto Networks is more attractive because it's not currently overbought. According to this chart here, you can see it's trading inside of its upper Keltner channel. It's just roughly above the middle channel. And again, you can see a nice RSI down here. It's above 50, which indicates a bullish trend, but it's not above 70. So also indicating that it's not currently overbought. So, it looks like a very bullish setup here for Palo Alto Networks, while also not being too frothy or too overbought. So the way I'd look to play this is actually with a call debit spread. And specifically, I was looking at the August 15th lane, and
Okay.
looking to buy to open the 180 and sell to open the 185. And it looks like the price has changed a little bit. It looks like those numbers got a little wonky. It was actually trading at about 3.8 points earlier, 3.9, somewhere in that range. So if you were to put a limit order in for this trade right here, again, selling the 185, you put it in for 3.9 points, you get filled there. That's above a 25% profit potential.
Mm-hmm.
And keep in mind, if you're selling the 185, that's the strike that you're selling. It would be right here. So as long as
Wow.
Palo Alto Networks was trading above this level, at or above this level, come option expiration, then that trade would realize its full profit potential. So that looked like a pretty nice trade setup that I found earlier.
Yeah, that's a tremendous amount of downside protection. And with the stock like that, you definitely are looking for that downside protection because it is a more volatile stock.
Hmm.
So that is awesome. And at that level too, it should have additional resistance from those what is it, mid-May lows as well. So that looks like a very conservative play, especially below that lower Keltner channel additionally. So I really like that setup, makes a lot of sense, and yeah, nice conservative, debit spread play while also being able to profit, what, 25% in a month, you
Yeah,
know?
exactly.
That's great, I love it.
Yep, absolutely. Well, thanks, Elaine. So I know you have a pretty exciting trade setup too. So go ahead and take over the screen share and show us what you have today.
Yeah, let me go ahead and jump into it. And my pick today is for VeriSign, and they are a company that works in the domain space. So when people go online and they buy a website, that is their business. So as you can see, looking at this chart here, I mean, they've just had a tremendous trend. Looking at it, you would not even think that we went through that April decline
Yeah.
because they just held tight. I mean, they had one significant down day and then they were right back at it. It's hard to believe that they performed that well during that correction. So they've been on a killer trend for over a year, and they're making
Mhm.
a series of higher highs, higher lows. Since that mid-May drop, they have been just slowly climbing higher. Now, they're not parabolic. I tend to not be looking, all the time at parabolic plays because, sometimes those parabolic ones, when they shoot up, they shoot right back down. And so sometimes I like to look for, these more conservative, stable, grinding higher sort of plays, especially when it comes to some of my call option debit spreads. But still looking at the chart a little bit more, we have a good technical setup here. It's trading above the 200-day moving average, which confirms a long-term bull trend. It's additionally trading above the 35-day EMA. This is also confirming the shorter term bull trend. And then below that, we have two additional indicators. The first one is RSI, an overbought, oversold indicator. Once again, helps us to time our entries here. And as we can see, RSI wise, it is below 70. It bounced off that 50 range, which can be a bullish sign for stocks as well. And it appears to be trading higher. So that movement, that bottoming of the RSI and trading higher is often a telltale bullish sign that is going to continue to trade higher from there. Additionally, on balance volume, we can see that the volume has been consistently rising here with VeriSign, which confirms the bull trend once again. So, as I had said, it is a position where I don't think it's going to shoot up 20% in the next week. I think that it's going to very consistently trade higher or consolidate here. And because of that, I'm looking at a call option debit spread. And the reason why is that call option debit spreads don't need your stock to go to the moon in order to make money. VeriSign could stay right where it is right now, and I could still reach my full profit potential. And so the spread that I'm looking at is the August 15th, 260 and 270 strike spread. It's currently trading at 8 points. It was a little bit lower before. It just popped up, of course. Same story with you, Blaine. But that is still a 25% profit potential with that August 15th expiration. And the cool thing here is that looking at our call option debit spread calculator, we would be set to make money if VeriSign goes up, is flat, or declines 5% at option expiration. Now, keep in mind, as I said, these prices were based off of the previous ones. They've changed a little bit since then, but the spread does have a 25% return in just over a month with those August expirations. And it's for stock that, as I said, I don't expect it really to move very much higher. I expect it to grind higher a little bit, but I'm not expecting the stock to move 25%. That's for sure in 1 month.
Yeah, exactly. I mean, but hey, that's all you need though. With this call debit spread strategy, trading these in the money debit spreads, just kind of like you and I were talking about. If you just get that slow grind higher, as long as that spread stays in the money come option expiration, then the trade's sitting pretty. It's doing really well, performing nicely. So great setup. And again, you can show on the chart there, Helene. I think you were looking to sell the 270 with that spread, right? I mean,
Yeah,
you
it's
can
a two
see.
260, 270, and so the break-even point's gonna be right around where I'm pointing right now. So well below the lower Keltner channel, a ton of downside protection there.
Yeah, and it's for this trade specifically too, your break even is right around a key resistance level the stock rallied off of
Mhm.
just a little over a month ago. So even better, you have the technicals working in your favor there, kind of protecting your trade somewhat. So great looking setup. Love it.
Thanks, appreciate it.
Yeah, absolutely. Well, Helene, I know we have a couple folks in the room today. So before we go ahead and wrap things up, do you want to go ahead and tell them a little bit about the really special offer Chuck has out available right now in observance of the holiday?
Yeah, absolutely. I know, Chuck wanted to run a very special 4th of July, discount on one of his, all-time favorites. One second, let me pull it up here. His Chuck's income alert. Sorry, let me just pull it on up. And it is a very special 4th of July discount. It is for 1776 off of this trade alert service, specifically uses the option spreads. So the trades that you just saw, Blaine and I both look at, are the key piece to this trade alert service. It also has been Chuck's most consistently profitable trading strategy over his 30 plus years in trading. And that's because, as we said, the stock doesn't have to move in the direction that you think it's going to move in order for you to make money on the trades. And that really increases your likelihood of profitability on this type of trade. So he wanted to extend this offer to you guys today. I'll go ahead, I'll drop the link in the chat and let me go ahead and do that now.
Yeah, while you're putting that in the chat there, Helene, I'll just go ahead and say, I for Chuck's income alerts again, like you said, it features, just like the trade setups, Helene and I just walk through these in the money call option debit spreads. It's been Chuck's most profitable strategy in his 30-year career of trading, 30 plus years. And I think I can speak for Helene and I too. It's our personal favorite strategy to use
Oh
as
yeah.
well. I mean, just because of the heightened probability the trade is going to end up profitable, being able to produce a return, whether the stock is up, flat, or even decreases by a certain amount, that greatly increases the probability that trade's going to end up producing a winner for you. And just speaking just about the CIA Trade Alert service with this promo, knocking off the nice 1776 discount he's offering at right now. I think, Helene, I believe that's the lowest price that this has ever been offered at.
Yes,
I don't ever
it
remember
is.
this being offered ever this low before. So this is absolutely steal of a deal Chuck's offering for this 4th of July promo, knocking off that 1776 with that big discount there. So highly encourage you all to check that out. We have some great trade alerts in there. They've been, really working out really solidly over the past couple months. Some, big winners in there, and as you can see, we've spotted some other nice opportunities out there too. So definitely highly encourage you all to check that out. And again, Helene, I think that's only running through midnight on July 4th. That's as long as that promo is available.
Exactly. Yep. Yep. Exactly.
Yeah. Well, perfect. Well, I think that's about all I have for today. Yeah, I didn't have any other trades to share or anything. So, anything else from you, Helene?
No, I think that's it. I mean, I think that gives everyone time. The last 10 minutes, if you have last minute trade you're trying to get in, now's the time before this long weekend.
Yep, exactly. Yeah, markets are about to close for good for the weekend and get ready for 4th of July. So, if anybody has any questions that are in the room, go ahead and post those in the chat now. But if not, then Helene and I think are just about ready to go ahead and sign off and get things all buttoned up for the weekend.
Exactly. But I hope you guys have a wonderful 4th of July. Thank you so much for joining us today. We love sharing our insights and our favorite trades. So we're just excited to be here with you guys.
Yep, absolutely. Well, I don't see any other questions coming in for now. So just want to thank you all for watching. And thank you so much for coming to attend today's live TOD session. Love having you all here. Love, just as Helene said, reiterate that. Love getting to sit down and share trade ideas and market commentary with you. And we will definitely be here back live with you this coming Tuesday after the holiday weekend. So happy 4th of July to everybody. Happy Independence Day. Hope you have a great long weekend. Enjoy some hot dogs and hamburgers and enjoy some time relaxing too. So, Elaine, I'll catch you back here next week.
Okay, see you guys on Tuesday.
See you, everybody. Take care.